Today, we are exploring the million-dollar difference between rich and poor thinking. What sets apart those who accumulate wealth from those who struggle financially? We will explore the habits, mindsets, and the circumstances that often set these two groups apart. The goal is to highlight actionable insights that could transform your financial future, regardless where you are starting from. Let's discover how small shifts in your thinking can lead to significant overall changes. We will begin with perhaps the most fundamental difference of all: spending habits. Rich people and poor people often approach money in completely different ways. While poor individuals might focus on immediate needs and short-term gratification, wealthy people tend to think long-term. For example, a poor person might see a paycheck and think, "Great, let's get that new smartphone." On the other hand, a rich person might look at extra income and consider, "How can I invest this to make more money in the future?" This isn't to say that rich people never splurge or that poor people don't save. But generally speaking, wealthy people are more likely to delay gratification and focus on building assets rather than acquiring liabilities. Based on research, the wealthy spend about 40% less of their income on visible goods compared to those with lower incomes. This difference in spending habits can significantly impact long-term wealth accumulation. But spending habits are just the tip of the iceberg. To truly understand the wealth gap, we need to dig deeper into the mindsets that shape these financial decisions. This brings us to our next crucial difference: education. And I'm not just talking about formal schooling here. Sure, having a college degree can open doors for you, but that is not the whole story. Rich people tend to be lifelong learners. They are constantly reading, attending seminars, and seeking out new information. Poor people, on the other hand, might view education as something that ends after high school or college. Warren Buffett, one of the wealthiest people in the world, famously spends about 80% of his days reading. While this might be an extreme example, it very well highlights the point. Many successful entrepreneurs and investors as well credit their success to continuous learning. But here is the interesting twist. This education isn't just about finance or business. They often seek knowledge in a wide range of fields, from psychology to history to technology. This very broad knowledge base allows them to spot opportunities and make connections that others might miss. A survey found that 88% of wealthy people read for self-improvement for 30 minutes or more each day, compared to just 2% of poor people. Now, you might be wondering, that's great, but who has the time for all that learning? Well, that leads us perfectly into our next point, and that is time. Time is the great equalizer, because we all have the same 24 hours in a day, but how we use those hours can make all the difference. Rich and poor people often have starkly different approaches to time management. Poor people often trade their time directly for money, thinking in terms of hourly wages or fixed salaries. Rich people, however, try to disconnect their time from their income. This doesn't mean that rich people don't work hard. In fact, many wealthy individuals work extremely long hours, especially when they are building their businesses. The difference is in how they view that work. A poor person might think, "If I work an extra shift, I will make an extra $100. A rich person is more likely to think, "How can I set up systems that make money while I sleep?" This is the concept of passive income, and it is a crucial factor when it comes to building wealth. Based on a survey, 65% of self-made millionaires had at least 3 income streams before making their first $1 million. But making the most of your time isn't just about work. It is also about who you spend that time with, which brings us to our next point. Wealthy people often have extensive networks of contacts and aren't afraid to leverage them. Poor people, on the other hand, might view networking as manipulative or feel uncomfortable reaching out to others for help. But here's the thing. Networking isn't about using people. It is about building mutually beneficial relationships. Rich people understand that success often depends on who you know, not just what you know. They are more likely to attend events, join professional organizations, and actively seek out mentors. This network doesn't just provide job opportunities or business deals, it also offers support, advice, and different perspectives. As the saying goes, your network is your net worth. According to different surveys, 70 to 85% of all jobs are filled via networking. This highlights the crucial roles connections play in career success. Speaking of net worth, let's consider how rich and poor people view something that can make or break financial success, and that is risk. When it comes to attitude towards risk, we see another very stark contrast. Poor people often view risk as something to be avoided at all costs. Rich people, however, see calculated risk as necessary for growth and wealth creation. This doesn't mean rich people are reckless gamblers, far from it. They carefully assess risks and potential rewards. But they understand that playing it safe all the time often leads to missed opportunities. For example, a poor person might keep all their savings in a low-interest bank account, viewing it as the safe option. A rich person might diversify their investments across stocks, real estate, businesses, and they are utilizing dislocations in the market. They understand that while there is more risk involved, there's also potential for much higher returns. Based on a survey, high net worth individuals typically allocate 49% of their assets in stocks, 26% in alternatives like real estate, 22% in fixed income such as bonds, and they only keep about 2% in cash. This diverse portfolio demonstrates their approach to balancing risk and potential returns. But taking risks isn't just about financial decisions. It is also about setting ambitious goals and working towards them, which leads us to our next point. Rich people are typically much more intentional about setting and pursuing specific and ambitious goals. Poor people might have unclear desires for a better life, but often lack concrete plans to achieve them. Wealthy people often use techniques like visualization and affirmations to reinforce their goals. They break big objectives down into smaller, actionable steps. Most importantly, they write their goals down and review them regularly. This goal-oriented mindset extends beyond just financial targets. Rich people often set goals for their health, relationships, and personal growth as well. They understand that true wealth includes more than just money in the bank. I find it fascinating myself that based on a research, people are 42% more likely to achieve their goals just by writing them down. But even the best laid plans can be disrupted by unforeseen circumstances. That is why our next point is crucial for long-term success, and that is change. The world is constantly evolving, and how we adapt to these changes can significantly impact our financial situation. Wealthy people tend to view change as an opportunity. When new technologies emerge or when economic shifts happen, they look for ways to capitalize on these changes. Poor people, on the other hand, often fear change and may resist adapting to the new reality. This adaptability isn't just about jumping on trends. It is about being willing to pivot when necessary, learn new skills, and embrace innovation. In today's fast-paced world, this exact ability to adapt can make the difference between thriving and just surviving. A report by the World Economic Forum indicates that by 2027, 43% of work tasks will be automated, up from 34% in 2022. This means that hundreds of millions of people have to be reskilled to be employable in the future, but also highlights the importance of adaptability in the modern workforce. Now you might be thinking, all these differences sound great, but where do they come from? That is an excellent question, and it leads us to perhaps the most fundamental difference of all, and that is mindset. This underlines many of the differences we have already discussed earlier. Poor people often have what psychologists call a fixed mindset. They believe that their abilities and their circumstances are largely set in stone. Rich people, on the other hand, tend to have a growth mindset. They believe that they can develop their skills and improve their situation through effort and continuous learning. This difference in mindset shows up in how people talk about money. You might hear a poor person say, "I will never be rich," or "money is the root of all evil." A rich person is more likely to say, "How can I increase my income?" or "Money is a tool for creating value." Importantly, this mindset isn't something you are born with. It is something you can develop and change over time. Based on a study, students who were taught about the growth mindset showed a significant improvement in their grades compared to those who weren't. The point of this video is to highlight that many of the differences we have discussed are within your control to change. And if you adopt them, that can improve your financial situation, regardless of where you are starting from. And that was it for today. Thanks for watching, and don't forget to like, subscribe, and watch another video. See you in the next one. Thank you. Bye.